Welcome back to Roxham TV. I'm your host, Jamie, and thanks for joining us today. We've got a busy show, so here's the rundown. We'll start with the Federal Reserve. Rates stay exactly where they are. No cut, no hike. And the market barely reacted. We'll break down what that really tells us. Then we'll head to Washington, D.C. Democrats are tying the shutdown vote directly to limit Donald Trump's immigration crackdown. We are hours from a shutdown, and immigration is now the leverage point. Next, geopolitics and energy. US is returning a seized Venezuela oil tanker, which is a surprising move that raised many questions about policy direction. After that, of course, we're going to dive into AI, Microsoft's massive AI spending spooked investors. Tesla just doubled down on AI and robotaxi. So we'll look at what's real and what's just promises. Then, of course, Bitcoin and crypto. We'll also take a quick look at Hyperliquid. So gold and silver trading are exploding on Hyperliquid, being the decentralized exchange, and most people missed it. So anyways, it's going to be a packed show, so let's get started with our first news of today. So Federal Reserve. The Federal Reserve just made its move. Well, more accurately, it chose not to move at all. So rates are staying exactly where they are, and markets barely reacted. That tells you something really important deep down. So Federal Reserve held its interest rate again. So here we are sitting at 3.75%, which was the same as December. So December they didn't have any decision when it comes to the rate cut, and right now we're holding steady. So the message here is quite clear. The Federal Reserve is saying inflation is still higher than what they wanted. So December 2025 inflation figure, the official headline inflation figure, is sitting at 2.7%. Like obviously the Federal Reserve want to control somewhat close to 2%. So in other words, inflation is still elevated, but the economy is strong enough for patience. So that's why they didn't opt for any rate cut nor rate hike. It's just a pause. So what the Fed is really saying is that, okay, we want to control to 2%, but they also say risk to jobs and growth have erased. That gives them room to wait, actually, and that's exactly what they're doing. Jerome Powell made it really clear future moves will depend on data, not the calendar, not market pressure, and definitely not a lawsuit against the Federal Reserve. And because of that no rate cut, markets are accepting the US rates may be staying higher for longer. So stocks, how the next question people like to ask, so what's the reaction of stocks market or crypto market in general? So stocks actually show very little reaction, and that's really showing something. So the Nasdaq edged slightly higher, so it was a 0.17%, and then S&P is kind of neutral, so a negative of 0.01%, and Dow Jones is up 0.03%. That is very basically the whole market is very flat. The whole what Federal was doing is exactly like traders expected. So no surprise, no shock. So that's why the market barely moved a needle. Right now, investors are betting on a rate cut later this year. So some think June may still be possible. So the next FOMC meeting is going to be in 48 days, and if we scroll down to the possibility, like the probability of a rate cut, like one thing very interesting is that we are only pricing in one rate cut throughout the entire 2026. So the current rate right now is 3.5 to 3.75, which is this column we are looking at here. So the next one is going to be on 18th of March, and people, so 88.5% of people predict that the Federal Reserve going to hold the rate steady yet again. And then same would goes for 29th of April. So 75.7% thinks there won't be any rate cuts. However, in June, that would change because something very interesting about the Federal Reserve Chair is that Jerome Powell term we're going to end in late May and also early June. So there will be a new chair to replace Jerome Powell. And whoever replaced Jerome Powell, of course, he's going to cut rate. However, one thing very interesting is that the market's only pricing in one rate cut. 2026, maybe 2 rate cuts for now. Of course, this figure going to change. It depends on who will replace Jerome Powell. So based on poly market, what people are thinking, who will Trump nominate as fair chair. Of course, this figure changes accordingly as there is more news about the candidates. But right now, they are kind of neck to neck together. So the first one on the list is Rick Ryder, and then second one is Kevin Walsh. So very close to each other, 34.3% and 33% respectively. Let's see how it goes. Like until then, rates will stay put, so stay constant, exactly how people predicted on this table, because there's really no reason for Jerome Powell to cut rates at this point. Now that, okay, if we go to S&P 500, it's literally breaking its all-time high. We drew this resistance, support and resistance line days ago, and since S&P, there hasn't got a chance for a pullback. A lot of people would expect maybe, okay, it's time for a bigger pullback, just like Bitcoin, just like crypto. But it just showcased because it's the stocks market and Donald Trump cares more about the stocks market. There's more, basically, the US government would try to push the stock market higher. For example, like the S&P 500 is one of the indexes that they care the most. So S&P breaks $7,000 yet again. So I would say if I were Jerome Powell, I really don't see the point of cutting rates because stocks are all-time high, gold, silver, all-time high. There's no reason for Jerome Powell to just scoop in right now and try to save the crypto backs, so try to save the Bitcoin market because I guess we are just not as significant compared to the traditional stocks market, which has been around for decades. So this means patience is key. No federal rescue just yet. And then moving on to the next piece of news I want to cover today. Like, since we are hours away from another shutdown, and this time, immigration is at the center of the fight. So Democrats are tying the shutdown vote directly to limit on Donald Trump's immigration crackdown. This is not about budgets anymore. It's about power. It's about pressure and control. So what's happening right now? Senate Democrats say they will not support a funding deal unless Donald Trump agrees to new limits on immigration enforcement. This is the final leverage point, and they are using it. So Democratic leaders want tighter rules on how federal agents operate. That would include limits on use of force, mandatory body cameras, and stricter rules for warrants during raids. So why this fight just escalated even more? Like, if you haven't been following the news, here's the context. So this standoff come days after a deadly border patrol shooting in Minneapolis. So that incident intensified scrutiny on immigration raids across the country. Democrats say enforcement has crossed from security into chaos. Senate Majority Leader said Donald Trump is feeling unrest, not restoring order. He argues the administration's tactics are making things even worse, so definitely not safer. Democrats, what they want is to separate Homeland Security funding from the rest of the government budget. So they want DHS funding carved out. Then they want time to negotiate new legal safeguards. So the message from the Democratic Party is very clear. So no new rules, no funding support. How the Republicans are responding, like, of course, they're pushing back. They say the spending bill has already passed the House, and reopening it could blow up the entire package. Senate Majority Leader says the White House is open to talks, but he says immigration policy should not be decided through a funding fight. In other words, keep policy separate from the budget. However, not all Republicans actually agree. Some GOP senators say they may accept separating Homeland Security funding. So that goal is quite simple, which is to avoid another shutdown. So according to Polymarket, so let's see what people are expecting right now. So there are 46% of people expect we're going to have another shutdown by Saturday. Like, of course, the deadline is 31st of January. What's very interesting is that, okay, back in, so last week, so just 3 days ago, so 24th of January, there was a huge pump for the probability of us getting another shutdown. So we jumped from 9% to 80% overnight. That's what is scaring people during the market. But like just basically yesterday, there was a huge dump again. So 76% down to right now 46%. So it's very volatile. And basically looks like the market, okay, it just went down again. So 45% chance. So basically the market favor a like the probability towards no shutdown than a possible shutdown. Like if no agreement is reached by Saturday, the government begins to shut down, just like how we experienced months ago. That means large parts of the federal government stop operating. So agencies affected would include defense, treasury, health, and transportation. Thousands of federal workers would be furloughed. Key economic data would be delayed, and government services would stop or slow down. So basically, that's what happened when it comes to CPI report, because the government agencies, they didn't manage to basically collect the data. So if there's another shutdown, and specifically a prolonged shutdown, these are the impacts that the markets are watching as well. So this is no longer just a policy debate. This is a credibility test for both parties, like immigration enforcement, public trust, government funding, all now tied together. Both sides are racing against the clock, and neither wants to be blamed for a shutdown. So, key takeaway for this news: Democrats are using the shutdown deadline as leverage to force limits on Donald Trump's immigration crackdown. Republicans, on the other hand, are warning that reopening the bill risks everything. If a deal is reached, it likely involves separating Homeland Security funding. If not, the government would yet again shut down. Again, this is immigration policy colliding with fiscal risk, and the outcome would shape both politics and markets in the days ahead. So we will take a short break for now, and coming back to you, we're also going to dive into the news of US returning seized Venezuelan oil tanker. So it actually surprised the market. Is this a shift in policy by the US, or is there something else going on behind the scene? So stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed. This sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising. The dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking with us. We're now breaking down into a very surprising move pulled by the US. So, the US is returning a Venezuelan oil tanker that it seized just weeks ago. After months of tough enforcement, Washington is suddenly changing tone, and no one is explaining why. So, here's what just happened. The US is preparing to hand back a seized oil tanker to Venezuela. This is the first known case of the Trump administration returning a vessel taken during its crackdown on Venezuelans' oil trade. That tanker is called MT Sofia. It's a Panama flagged supertanker that has been anchored near Puerto Rico since it was intercepted in early January. So why this news so stands out. So this decision breaks a clear pattern. Since late last year, the US has seized at least 7 tankers linked to Venezuela. The goal is simple, is to cut off oil revenue to Caracas. Officials describe these ships as part of a so-called dark fleet used to dodge sanctions. Until now, the message was clear: seize first and ask questions later, or boom the ship first and then ask questions later. When the Sophia was stopped, US officials said it was operating without clear nationality, violating US sanctions, and part of illegal oil transport. In other words, it fits the profile of every other tanker seized, which makes this reversal even more confusing. So the key point here is officials have not explained why this tanker is being handed back. The Coast Guard declined to make a comment, so no public legal justification, no police clarification, so no timeline shift announced, just a quiet handover. This move comes during a very unstable phase in the US and Venezuela relations. Washington has been trying to pressure Maduro government, limit oil exports, and control energy flows. At the same time, Donald Trump has talked openly about long-term US involvement in rebuilding Venezuela's energy sector. So enforcement and engagement are now happening at the same time. So there are lots of questions being asked by the general public. Is this the US changing strategy? Is this a one-off exception? Sanctions are still in place. Seizures are still happening, but this move shows the policy is not as rigid as it looked. So, clean takeaway for this news: this is not a full policy reversal. This is a signal. So even in hardline approach, U.S. policy toward Venezuela remains fluid, so flexible. Enforcement is aggressive. Strategy is, however, very flexible, and decisions can change without warning. Very Donald Trump-like. For energy market, for geopolitics, and for investors watching oil flows, this tells us one thing very clear. When it comes to Venezuela, US policy is very unpredictable. All right, so let's move on to more AI story because there are two giants we are breaking today, and this is what spooked Wall Street last night. So Microsoft, there wasn't a weak revenue, there wasn't like a slow demand, but spending from Microsoft it scared everyone from Wall Street. Microsoft just posted one of the biggest AI investment numbers we've ever seen, and investors did not like what they saw. So what just happened is the reported earnings got released after the bell. Revenue rose 17%, so to $81 billion. That number actually beat expectations. So in fact, investors actually like that number a lot. But what they don't like is the cost. So they didn't focus on the revenue, they focused on the cost instead. And that number is shocking. So Microsoft said capital spending hit a record of $37 billion this quarter. That's up nearly two-thirds from a year ago. Most of that money is going into data centers, AI infrastructure, and advanced chips. This is Microsoft going all in on artificial intelligence. So how market reacted, let's take a look at how Microsoft stocks is doing. So for the past 5 days is okay, but like after hours, so take a look at this. So after hours, it dropped 6%. So 29 bucks, so 6%. That drop wiped out tens of billions in market value in minutes. The message from the market was clear. Spending is rising faster than confidence. And this is also why Wall Street is concerned about Microsoft. Like, yes, Microsoft is investing for the future, but investors want proof that this spending is paying off right now. But what they have seen is that the returns look unclear. And then we now have to get into another core business of Microsoft. So Azure. So Azure cloud business actually grew 39%. So that number came in just above expectations. But for a company spending this aggressively, some investors were hoping for stronger acceleration. Instead, the cloud business, the growth, okay, looks solid, but it's not explosive enough. Another issue is concentration risk for Microsoft, because like a large portion of Microsoft cloud backlog is now tied to OpenAI. That partnership has driven much of the AI momentum, but it also means Microsoft's AI story is closely linked to one partner alone. And of course, markets don't like dependency. Microsoft is no longer so for the competition in that. So Microsoft is no longer alone. Google is pushing hard with its Gemini AI models. Anthropic with its Claude is gaining traction, and other players are moving fast. So AI race is no longer about who got there fast or who get there first. It's about who can scale profitably. Zooming out for a moment, analysts expect the tech industry to spend over $500 billion on AI this year. That is a massive number. It raises a big question. Who actually earns returns, or who is just burning cash right now because OpenAI is still not profitable? Microsoft is not backing down. Management is clear. They believe AI will reshape computing, and they believe that this spending is necessary for them to stay competitive in the whole tech giant or the whole AI realm. So for Microsoft, this is a long-term bet. So clean takeaway is that Microsoft did not disappoint on revenue. It disappointed on confidence. The market is no longer rewarding AI ambition alone. What the market wants is discipline. They want margins, and they want actual proof. Until investors see clearer returns from this historical spending spree, every earning report will come with more scrutiny. And it isn't about whether AI matters, it's about how fast it pays off. So building up on that AI news, we are diving into Tesla because Tesla, they are right now investing $2 billion into Elon Musk's XAI. At the same time, Tesla is once again promising that robotaxis are coming this year. So what just happened? Tesla announced it will invest $2 billion into XAI. The message is clear. Tesla no longer wants to be seen as just a car company. They want to be an AI or autonomy company. So why AI is such a core story here? Tesla says this investment will support its self-driving software, its autonomous driving systems, and its long-term robotics plans. This is about training models, processing data, and building in-house AI power. In short, Tesla is tying its future directly to AI. So speaking of robotaxi, yet again, so alongside the investment, Tesla reaffirmed its robotaxi timeline. So the company will sets production of its cybercab will begin later this year. So for those of you who haven't seen a cybercab, like the interior design, not that I have, but this is what everyone is expecting, and this is the design being presented by Elon Musk. So there is no steering wheel. There's no pedals at the bottom, as you can see. Of course, there will be no human driver. And this is what Elon Musk thinks is, okay, this is a really bold idea, but based on what he's saying, he expects production will start in April this year, so 2026. After years of delays, let's see the date of production, if that is actually real. But like reading from the news and reading about Elon Musk every single day, one thing I learned about his tactics or his way of running business is that, okay, there might be delays, there might be late, but he always deliver. So that's why I'm still a long-term holder of TSLA. So investors like what they heard, at least for now. If we hop onto TSLA, so Tesla stocks, Tesla actually rose like 3% in after hours trading. So that was the opposite of Microsoft. because for Microsoft, the massive spending after hours, it dropped 6%. Tesla is a completely different story. So I guess there is so much hopium for Elon Musk himself as a person running that business. So Tesla right now is sitting at $430, and after hours, there was like a huge pump to like close to $450, and right now it's correcting a little bit. So that reaction tells us something very important. Markets are still willing to buy into the AI story even after real world proof shows up, even before real world proof shows up. So this cyberpunk is not in production yet, but investors are liking the idea. So the key differentiation, I would say, is like Elon Musk and also Microsoft. And I really, personally, I'll get why. Okay, to be fair, Tesla had a solid quarter. So the company, they beat revenue expectations, they beat earnings expectations and posted stronger than expected margins. Its core auto business held up better than feared. At the same time, Tesla's car sales remain under pressure. So the pressure is still there. When it comes to the auto business, competition is very intense because like EV, there's like a strong EV market here in China. It's like cheaper rivals everywhere, and US tax incentives are expiring. So that makes growth harder, which is why Tesla is leaning harder on software, AI, and autonomy. Personally, the reason why I'm holding TSLA long term is that I don't see Tesla as a car company, but I see it as an AI or humanoid robots company. So a very futuristic company. So Elon Musk, he wants investors to focus on the long game. His vision is simple, which is a massive fleet of autonomous vehicles powered by Tesla's own AI, and hence he's also building their own chips. So instead of relying fully or solely on NVIDIA, in that vision, Tesla isn't selling cars, it's selling transport as a service. So of course, there's still big risk involved. There's still tension. Like Tesla has promised autonomy before, timelines have slipped before, regulatory hurdles will still exist. But reading about Elon's for all these years, one thing I learned about him is that whenever there's hurdle, he'll just like go down to the road and push that stone, push that hurdle away himself. So clean takeaway for this news, Tesla is doubling down on AI because it has to. The car business is getting very tough. The competition is so keen. Margins will not carry the stock forever. So Tesla is betting that autonomy and AI will unlock its next growth phase. The $2 billion investment in robotaxi promise raised the stakes even higher. Now the pressure is on because this time investors would want to see results. Let's see if we end up seeing the production in April 2026. All right, so we will take a short break for now, and coming back to you, we're also going to dive into the world of Bitcoin and crypto because Bitcoin is yet again getting attacked. So let's see how the community respond. Is that basically a false statement, or is there any truth to it? So stay with us, and we're going to bring you more news in a bit.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin. No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy. Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking with us. We're now diving into the world of Bitcoin and also crypto. What happened this past few days is that Bitcoin got attacked yet again. So this time it's by new scientists. So this is if we hop onto Twitter, crypto Twitter, so CT. So new scientist with 4.2 million followers, they just made a post and really offended the Bitcoin community. So a major science publication just went after Bitcoin, and within hours, the internet checked everything that these people talked in a video. So what happened is that on 25th of January, New Scientist published this video and claiming that Bitcoin is one big disaster for the environment. So the video even went further. So it said Bitcoin used too much energy, is a bad investment, and views crime on the dark web. It even asked if Bitcoin might be the worst idea of the 21st century. So that claims, of course, it triggered a huge backlash in the Bitcoin community. And let's be clear about what they are arguing. So they said Bitcoin mining wastes energy. They said Bitcoin enables crime. and they framed Bitcoin as socially harmful and irresponsible. That framing immediately raised eyebrows. So the response by the community, okay, if we scroll down, here we have the community notes step in because the response was fast. The post was hit with community notes. So these are not opinions. These are hardcore evidence. So users linked peer review research. So not blog posts, not tweets, but like actual studies that these pages should have done before. So one of the first correction addressed crime. So multiple studies show that money laundering with crypto is a tiny fraction of total the global crime. Fiat cash still dominates illegal activity by a wild margin. That directly contradicts the Bitcoin fees crime narrative. And then it came to energy, the energy. So that's another narrative that has been that is attacking Bitcoin for years. Community Note linked more than 20 peer review papers showing Bitcoin mining helps monetize renewable energy and it stabilizes power grids, or it captures strained and wasted energy, and it actually reduces the methane emissions in some areas. In other words, Bitcoin mining is often used where energy would otherwise be wasted. So here's the interesting part. The original New Scientist post actually struggled to gain traction because, like, okay, this is an account with 4.2 million followers. And if we scroll down to look at the views, it's actually not a lot. So 63K, 63.5K views. So according to this, it's not like in ratio with this followers numbers. So if we scroll down, like the replies are actually getting more views, in ratio. So there are thousands of views actually correcting them, hundreds of likes. So a much stronger engagement. That tells you where the audience and the facts landed. This wasn't just like crypto Twitter or CT. Industry leaders and scientists call it out directly as well. So one response summed it up bluntly. Like every single claim in the video was wrong. And other scientists asked a simple question. So where is the evidence? This wasn't just a bad, a horrible take, I would say. It shows a deeper problem. Old institutions are still repeating outdated Bitcoin talking points. Meanwhile, the data has moved on. Bitcoin is used by millions who don't have access to banks. Bitcoin turns wasted energy into economic value. Bitcoin operates in the open where claims can be checked instantly. So this is the real story. So it's the narratives versus open truth. Bitcoin doesn't rely on press release. It relies on open data. So when someone gets it wrong, the direction doesn't come months later. It comes immediately with sources attached like this. So the final key takeaway for this news or this post, this wasn't Bitcoin being attacked. It was Bitcoin being stress tested and passing the test. In 2026, narratives don't win by authority, they win by evidence. And when receipts are open or are public, bad arguments don't age well. So this episode shows how early we still are and why Bitcoin isn't fading and is just about to get started. All right, so speaking of Bitcoin, let's do a quick price analysis. So let's hop on to the charts for now. So of course, we're doing it from with the daily candles, and then we're going to move on to the weekly and also to the 2-week candle Bitcoin price. So Bitcoin, not going to lie, it's just like consolidating within this bear flag because like the reason why I call it bear flag because zooming out, this was like a huge dump from 126K and then we kind of consolidating before completely losing that level of support that we've been building since 21st of November 2025. So if we soon close on, and if we lose this bottom line completely, that means we are officially entering the third stage of the bear market. So there are still room to actually not much room. Not gonna lie, this pump has been quite disappointing, I would say. So the reason why I think we are stretching out, and very likely we're entering the third stage of bear market in first week of February. So the reason why is that, okay, if we bring up the 1-day cycle time frame, so how it works is just like reading the momentum of the waves. So it seems we are getting very close. So we are right now at 81 or 83, so 81, okay. 81 on the 1-day time frame. That means there are more room for a pullback. So this is going to take time. So if we just draw a rough line on the cycle time frame, so when it comes back, it's going to be like first week of February. That is the time that I'm eyeing. Maybe we're going to lose this rising support line completely, and then we're going to enter the third stage of bear market. So this is just a pattern that has been playing out since basically Bitcoin ever existed. There are 3 data points. So the reason why I'll say this is, okay, if we hop on to the weekly candles for now, it becomes clearer. So why I keep talking about this bear flag and being a second stage of bear market. So if we pull up the Ichimoku cloud right now, we are still, okay, we're officially not inside the cloud anymore. So we haven't closed this weekly candle yet. So we will close that on Sunday. We'll have a new print on Monday. So in other words, there's just like 3 days left. So looking at this level, okay, we are sitting at 87.8K. And for the Ichimoku cloud, the leading spendee, we are officially, what is it officially? Well, let me zoom close on. So we are officially below the Ichimoku cloud, the leading spendee line. So let's see if we close below, because right now we're just wicking. Again, this weekly candle we haven't closed yet, so we don't know for certain if this is again entering the third stage of bear market a little bit earlier. But first week of February is the time that I'm eyeing very closely. And one thing very interesting is that not just Ichimoku cloud, this is still like within the consolidation period. And if we zoom out, go to the previous cycle, so back in 2021, late 2021 to early 2022, like we spent 3 months inside this cloud. So if history repeats, and it has been repeating so far, like we have already spent like 84 days. So if we stretch that out to that 90 days or 90 something days, that magical number, so it's a little over 3 months. So if we zoom that out, it's going to be first week of February. And guess what? It lines up perfectly well with the Ichimoku cloud and also the 1-day cycle time frame that I was doing earlier. So let's also hop on to 2 weeks, and then you'll see why I'm eyeing this level so closely. So let's close the Ichimoku cloud and let's bring up the 50 SMA. So here we have the consolidation period, and then here this blue line, we have this 50 SMA. So there is a strong support and resistance, actually support line right now, but looks like the support is getting weaker. So we are hanging. So technically we're still above the support line. Again, wicking is fine. We haven't closed this 2-week candle yet. We are closing next Monday. So let's see if we close below this level or we close above. Then if we close above, what we're doing is that we're kicking the can down the road. So general speaking, I'm still very bearish in coming months. But if we end up closing above this blue line, we're just like stretching out that consolidation period a little bit longer, maybe for a few days or maybe for a week or two, less than 2 weeks in my opinion. So keeping a very close eyes, but point being, we were doing that bear flag, so consolidation period. So we had the Ichimoku cloud for the 1 week candles, and right now for the 2 week candles, and focus on the blue line here. So 50 SMA, this happened to be the support line. So in other words, losing this line is as significant as it sounds. So that is the last support that we have. If we are indeed closing below this level, so 87K, that is a very critical level I'm watching. So if we do close below, and other level that I'm watching is 77K. So that would align with the basically with the analysis I was doing earlier. All right, so let's see how it plays out. Let's hop on to some good news in crypto, because like there is some good news. Bitcoin, there's hanging by a thread with this 87K. I have a bunch of buy order at 77K, but let's look at some good stuff. It's not all doom and gloom. So Hyperliquid. Okay, everyone was just staring at Bitcoin, but while Bitcoin goes sideways and consolidating, something very different is happening under the surface. So Hyperliquid, a decentralized exchange, is quietly taking market share using gold and silver, and most people miss this. So this segment, let's take a deep dive on Hyperliquid, because Hyperliquid is making a silent push, not with memes, not with hype, but with gold and silver perpetual contracts. This is not a rotation inside crypto. This is crypto pushing directly into TradFi trading. So let's start with the data. First number is that, okay, on 27th of January, so Hyperliquid HIP, so open interest hit $793 million. 1 month ago, it was only 260 million. That is a 3x difference, so a 3x increase in just 30 days. So a simple explanation for HIP3. HIP3 is basically a feature Hyperliquid launched last October. So it lets anyone deploy a perpetual feature market. So no permission needed. However, you must stake your HYPE tokens and you launch a market. So that's it. Sounds technical, but here's the result. In less than 4 months, HIP market generated $25 billion in trading volume. That's real activity, not theory. Second number is liquidity. Like liquidity is key. Hyperliquid CEO shared a comparison. So on Hyperliquid, Bitcoin perpetual spread is about $1. On Binance, on the other hand, the spread is around $5.50. So order book depth tells the same story. At some price level, Hyperliquid shows 140 BTC on book. Binance shows 80 BTC. So that is another important figure. It means DAX is starting to match CEX, so centralized exchanges liquidity. That used to be impossible, but Hyperliquid just beat the unthinkable yet again. And at that number, like here's the number most people ignore. Silver perpetual contracts on Hyperliquid did $1.25 billion in volume in 24 hours. That makes silver the third most traded asset on the platform, only behind BTC and ETH. Gold perpetuals also crossed $131 million in volume, like again, a lot lower compared to silver, but it's still very significant chunk. Like that's pretty ironic, don't you think? Because on a crypto exchange, crypto decentralized exchange, traditional metals are taking over trading activity. So how did liquidity grow this fast. Like how did Hyperliquid pull it off? So step one, Hyperliquid built with speed, like using its own consensus system, having their own chain. Trades confirm in 0.2 seconds. It can process 200,000 orders per second. That gets market makers very interested. Step two is market makers actually test that, put that theory to test. So they realize on-chain trading can be actually very fast. So they commit more capital, liquidity, so that improves. And then traders, of course, will notice like slippage would drop, execution fees like Binance, so a CX, retail institutions move volume over. And the last part, why Hyperliquid still succeed during market downturn like this, is the fee, of course. So fees, market makers earn more. They deploy more capital, and the cycles basically keep repeating. Right now, Hyperliquid controls 70% of all the DAX perpetual open interest. So first one is, of course, Hyperliquid. 24-hour perp volume is $9.2 billion. The second one is Esther. It doesn't even come close, but Esther. So Esther, $4.5 billion in the perp volume in the past 24 hours, and then that one is lighter. So there are only these three competitors, but like Hyperliquid is doing exceptional well, because like these two platforms right now, they are facing the issue of like airdrops. So airdrop farmers, they were just like farming and trading on these platforms without actually wanting to stay after the airdrop. So this is a very typical airdrop projects would face. Like Hyperliquid is also an airdrop token, so Hype token is airdrop token, but like they were the first that managed to impress the market with the whole trading experience. These more like CX than DX than DAX. So that's why they had the first mover advantage. Like the rest, they could come, but like the first mover advantage really does count. So, and not to mention, Hyperliquid is a really good product. And yeah, the gaps versus competitors is growing, and it's growing fast. And during market downturn like this, usually, maybe just a few, like one or two competitors, one or two projects would actually exist in the field. So, talking about gold and silver, okay, why gold and silver exploded here on Hyperliquid? The simple answer is macro, like macro reality. So in 2025, gold was up 67%, its best year in decades. Silver, even crazier. So silver was up 145%. And in 2026 alone, right now we're still in January, silver is already up another 53%. So central banks are buying, ETFs are buying all these precious metals. Retails are queuing outside the stores to trying to get some silver bar or some gold coins. So everyone is running the same trade. But traditional markets, of course, there is a limit. So people like to take on some extra risk for no reason. They like to pull more leverage. However, for TradFi markets, TradFi platforms, they simply don't have that flexibility to offer to the customer. So gold futures are very hard to access. Leverage on TradFi platform is capped. KYC is, of course, required, and capital efficiency is low. However, what Hyperliquid could offer is that traders in Hyperliquid would get 50 to 100 times leverage. Not that I'm recommending. Personally, I don't recommend pulling 50x leverage. For a DAX, it requires no KYC, of course, high liquidity, as I mentioned, and fast execution. So the whole experience, it feels more like CX. So for global traders, this is a big deal. What happened is that commodity traders and hedge funds came for gold in Hyperliquid, but they're staying for crypto. So that's user migration. So from gold, like speaking of gold, here's a trader. So trade XYZ. He is now the largest HIP3 deployer. Its biggest markets right now are like a top 10, 100, top 100 company index, silver, and Nvidia stock perpetual. So very concentrated. Like together, those markets alone did tens of billions in volume. At this point, Hyperliquid isn't just some crypto decentralized exchange. It's becoming a multi-asset trading layer. Of course, that is like a lot of good news and how much revenue they've been earning. Like there is very positive news going to the price appreciation as well. So Hype token, for the past 7 days performance is up close to 50%. So right now it's trading at $32, at $32.48. The reason is simple. Hyperliquid uses 97% of protocol fees to buy back and burn those hype tokens. So there's a constant flywheel effect going on. More volume, it means more fees and more buybacks and less supply in the market. So that's real cash flow logic. Of course, like there's risk as well, and not financial advice. I'm not asking you to ape into Hyperliquid after it pumped 50% in the past 7 days. So Hyperliquid, the fully diluted valuation is actually right now above $30 billion. So that already priced in major success. But like the short-term risk that would include regulatory pressure on metal perpetuals, competition from other exchanges, like as I go through the list, there's still Aster, there's still Lighter, even though the gap between them is widening. The exchange again for here is backed by CC himself, so there might be some risk coming, competition coming from all directions. So not only DEX, but Hyperliquid is also competing with CX. And liquidity sensitivity if market makers pull back. So that's a huge risk for Hyperliquid. So yeah, I mean, trade at your own risk. What traders should watch next is, okay, there are a few signals to watch. Okay, first is HIP3. So if the open interest keeps rising, that is a good sign. And then second is Bitcoin order book depth need to stay very tight. And third factor is gold and silver volumes remain strong. So if those break, then the momentum breaks, following the entire crypto market now that we're in a bear market. So clean takeaway for Hyperliquid. This isn't just a crypto rotation. This is a market structure shift. So decentralized exchanges used to compete on safety. Now they're actually competing on efficiency. When on-chain trading becomes just as fast, just as liquid, and maybe more flexible than centralized exchanges, power starts to move. So gold and silver are just the entry point. Stocks, AVEX, commodities will become next. So Hyperliquid isn't just making noise, it's making progress. And $793 million in open interest is just the first milestone. All right, so that's pretty much all the news I want to cover today. Last call to action before we end the show. Make sure to give us a follow on Twitter. So my personal Twitter is jamjamcrypto_io. Make sure to follow Roxham TV as well. So it's very easy at Roxham TV because we have lots of valuable content updating on an hourly basis. And we don't just cover Bitcoin news. We cover here we have gold or macro economy or geopolitics. So point being, there's so much content you don't want to miss out, and make sure to give us a follow on Twitter. So my show is from Monday to Friday, starting at 3 a.m. Eastern Time. If you don't manage to watch my show live, Don't worry, the replay is also available on both YouTube. So my personal YouTube being Gem Crypto YouTube channel, and also on Roxham TV YouTube channel. Thank you so much, guys, for watching. I'll see you guys in tomorrow's show.